Hey, what's up, guys? It's Serge. As you guys know, I've been advocating an active investing approach for a long time now, as opposed to a hectic intraday trading approach, just because most people don't have the time for the day trading. It doesn't fit their personalities. It's very hectic, and it's a full-time commitment. At the same time, though, I want to make sure you guys know I'm not trying to play down day trading. I just think for most people, it doesn't really fit into their rhythm. There are, however, certain trades you can do from a day trading perspective or an intraday basis using an active investing approach, particularly if you have, say, a smartphone or an iPad or something where you can keep checking up on the market as you go through the day and get on with your things. So one thing is called the open gap trade, and it's very simply what you get. You get either a market down gap, sorry, down open versus the previous day's close. So you can see here in the S&P, on the SPY, this is yesterday morning, July the 6th, we came in, we had a big gap down on the back of Greece. So you either have a gap down or sometimes you have a gap up, and then it reverts back to the previous day's close. Usually it happens very quickly. Usually, in fact, if it doesn't happen in the first hour and a half or so, I forgot the exact statistic, it actually tends to not happen at all. It tends, right? It doesn't mean it can't. So what you see when you have a big gap like this, one thing you can do as an active investor, not as a non-day trader, you see this down gap and say, okay, I'm happy to buy this market if it starts going start filling into the gap. So you put a buy order, say maybe a little bit into the gap, or even maybe a little bit below the market, and one kicks the other out. So that way you don't have to day trade this. And you say, okay, I'm happy for half the gap to fill, and you put a price target, say, halfway up this gap, in this case, say around 206.50, which is the price for the SPY. You can do this very high probability trade without having to be a day trader. You can sit in front of your computer and watch this if you want to, but you can put this order in before the market opens, and there's a really good probability that at least half the gap gets closed on average. I suggest you do this with bigger gaps, like not with like major breakaway gaps where the market just like breaks into a different direction, but if the market's kind of range bound, as it was for by the way. So look at if you look at this chart here through a multi-day perspective, you can see that the market was very range bound. So we bounced off of the lows off this range here on Monday, and we just simply we bounced towards the bottom end of the range. So we didn't break below the range, but towards the bottom of the range, which was a good opportunity to see one more rally before we then ultimately break lower or higher, whatever the case may be. In this case, so far it looks like we're breaking below there. So the open gap trade, if you do it right, if you focus on the ones that are big enough but not breaking away from the market, in other words, if you don't see a major catastrophic breakdown or break up, in which case the gaps tend not to close, this is a great trade that you can do on an intraday basis as an active investor. So I hope this makes sense, guys. Please subscribe to my channel, like the video, and I'll see you guys in the next video.